Good morning and welcome to the morning call for Monday the 6th of March 2017. Two major things that happened over the weekend that I think you really need to concentrate in on. First, and can't go past it, the Fed is pretty much all but assured they're going to raise rates in just under 10 days' time. Over the weekend, you saw Yellen, Stanley Fischer and Dudley, they're the big three inside of the bank, reiterating pretty much what we heard from Powell and also from Brainard last week, that they are very much looking at the point of view that everything is now aligned. Most of their mandates are being reached, at least close enough to, on that side as well, to see rates rising. And Stanley Fischer was the one that was the most prominent there, basically saying that if he needs to, he'll join forces in what's been said by other core members, and that is that very much they are looking at the 16th of March as being a rate rise event. That sort of came through in the US dollar. You saw it across the board. Although if you have a look, cable and also the euro have actually gone the other way. The euro and the pound have done quite neatly, but in the main, everything else basically weakened off against the US dollar, and the dollar basket is now very much welded above 100. Very interesting indeed. I also want to highlight what's going on over in China. The People's Congress is currently going on. And yesterday, Premier Li Keqiang did come out and say that they're now moving their GDP target to 6.5%. Now, that's an interesting situation because the Aussie didn't actually move. And the reason for that, we believe anyway, is that they're still targeting M2 monetary policy at current levels, which is quite high amounts of stimulus. They're still looking at around about a 3% trade deficit, which means they're going to put another reasonable amount of activity into the market as well. So what we take that 6.5% GDP to be is actually a floor rather than a target. So the 7% or around 7% was a target, and they didn't reach it last year, something that I don't think they want to actually continue to do. So 6.5 is an absolute floor. Anything above that is actually what they probably want to achieve. So it'll be interesting to see how the equity market reacts to that today, but that was the news out over the weekend that I think you've really got to look at. It is also the start of a full week in the first week of a month, and therefore it's big numbers with regards to anything central bank. RBA tomorrow, you've got the ECB on Thursday, the BOE and the BOC also then, and then you've got non-farm payrolls on Friday. They were supposed to be the last Friday, but this year they have actually moved it back. So there is a lot of macro data out there as well to sort of start this week. Other thing to probably just concentrate very closely on, there is a bit of a settle down in energy. Energy last week had some really big moves, and that was quite interesting to see. It really did throw the market around quite heavily. It's really calmed down. So something to sort of be cognizant on. No sort of levels were broken on that up or downside. So again, very much welded at 57, very much welded at around about 50, and everything in between there is basically where it's been trading, and that sort of staying true. Other thing to watch is bulk commodities have started to ease off, and the China numbers may be the other thing to be concentrating on. So the negative ramifications of that 6.5% may be that bulk story. And we did see the futures over in Dalian having a little bit of a poor end to the week, and that may be something else to watch. Otherwise, have a good trading week, have a good trading day. I'll speak to you tomorrow. There's plenty to talk about, I know, and have a good time.